Managing Director, Bajaj Finserv, joins us now. Good morning, Sanjiv. Thank you very much for joining us. If you can start by telling us whether there will be any changes at all in your holdings in the insurance arms. We have seen a lot of other insurance companies show interest, whether it's HDFC or other insurance companies. Should we expect any news from you as well?
Lata, as far as our two companies are concerned, both of them are very adequately capitalized and both have been very profitable for a very long time, have not needed incremental capital for the last 5 years or so. So the two companies in the short term don't need additional capital. This is, of course, something that is open to Allianz to take their stake up, and we've had some informal discussions over the last couple of months. We have to see eventually what their board decides. So these are ongoing discussions right now. We would be, of course, very open to it either way. But beyond that, I can't comment right now. I think over the next few months, as they take a call and as Allianz and Bajaj discusses this matter further, we should have a much clearer view.
Okay, fair enough. Sanjiv, hi, good morning. We have been discussing the stars of 2015, or the stocks that have given great returns to shareholders. And your stock, Bajaj Finance, has been one of them. 70% returns to shareholders this year. So just wanted to understand from your end what the 2016 would be like for the company, and where will the growth triggers come in from?
Sonia, when we've talked about Bajaj Finance over the last now 7 or 8 years, not just the last year, we've talked about a very consistent strategy of being a diversified lender in the financial services space. And this is something across consumer lending, SME lending, rural lending, as well as commercial loans now and wealth distribution. We have managed to build quite stably, I would say. And this doesn't change going into the next year as well. We have said that given our opportunities that we see for ourselves to grow our top line 20-25% year on year looks distinctly possible. In a bad year, it may be a little lower. In a good year, like what we have seen in the last 9 months, it has been much better. And we stay with that. We see tremendous opportunity in this space in India. And as long as you're willing to do it thoughtfully, as long as you're willing to pause when required and grow when the times are good, I see no reason why we and many others like us should not be able to do the same.
It's not a mean performance at all, Sanjiv. It's about a 400% gain over the last 2 years. It was a 1500 stock same time 2 years ago. So this is a dramatic rally that your stock has managed. Will there be any more capital changes? Because you'll always capitalize it at the right time. Should we expect anything on those lines?
To the first point, Lata, I think the market has discovered the stock in the last 2 years. We've been doing what we've been doing the last 6-7 years. And the kind of numbers that you talk about start getting scary when you think of those numbers. So we are very much focused on what we do. We let the markets decide what they think is fair in terms of valuation. We raised capital in Bajaj Finance only in June this year, and keeping in mind that the capital should be sufficient for the next 3 to 5 years, again depending on growth. So I don't see us needing any further capital in Bajaj Finance in the near term at least.
So when you talk about 20 to 25% top line growth, have you accounted for the geographic expansion as well, Sanjiv? Because I understand that you're planning to enter, newer states like Rajasthan, Tamil Nadu by the end of this fiscal itself. Once that plays out well, what would the growth look like?
Sonia, we've been expanding both our urban presence and our rural presence very steadily year on year. And that continues. So when we are looking at the growth, we are looking at the growth keeping that in mind as well. Of course, when the ducks all fall in line, then you see much higher growth. You've seen a 35% growth, for example, so far this year. But you will always have times when we have to slow down certain businesses in particular geographies or in particular product lines. For example, last year, we slowed down our mortgage business. We grew only 10% in our mortgage business compared to over 40% in the other businesses. And that's why it averages out. We think we must talk about a number which we know that we have a great shot at achieving. And if there's outperformance beyond that, naturally that's a further upside that's available.
Do I remember this right? You all started reporting your gross NPLs on a 150-day recognition versus a 180-day previously?
Yes, we've started doing that. We've tried to stay ahead of the NBFC curve over here and do more what RBI requires banks to do. And we started this journey about 5 years ago as we started building the diversified book. And as RBI has tightened the norms for banks and NBFCs, we've started moving closer to the new norms for banks, and that's why you've seen this change from the early part of the
No, you didn't roll back anything. It was not 180 days in the previous quarter, but you brought it down to 150 days.
You know, I don't know whether it was in the previous quarter, if it was earlier, but I know that we've aligned ourselves by and large to what banks were required to do, and we've had no material impact of that because our own internal provisioning was already ahead of that.
Okay, what is the position in terms of NPLs? Did you all see any chinks in the armor with the rural economy slowing?
Fortunately, we've not, and as you know, we publish our delinquencies by month, by product line, quarterly on our website, so it's there for everybody to see. There's no open secret there. Our numbers have held pretty well, and I think that's where it again goes to say about how you manage to grow your book. We are in no hurry to grow it in any accelerated manner, and we find a 20-25% growth rate, which is also, as we say, not a bad growth rate, to more than adequately take care of all our other credit concerns.
Okay, so, you have been talking about the general insurance business being sluggish for the last couple of quarters. What's the outlook like for the first half of 2016? Have you seen any improvement at all?
The general insurance business has been growing at about 12 to 14% or so. It slowed down in the last 4 quarters or so as the car industry sales slowed down, because a large part of general insurance in the country is insuring new cars. I see as this picks up, the car sales pick up hopefully in the first half of next year, we should start seeing a boost on the general insurance side as well. In addition, what happens is when the industry slows down, we see particularly the public sector companies that start losing market share come down heavily on pricing. So we see discounts going up, mostly in the corporate lines of business, because that's where it's easier to get business by throwing higher discounts. But then that brings the growth number down as well, because the top line comes down as a result.
Okay, actually now, Sanjiv, there already is and will be a lot of competition from the digital finance and digital marketplace companies. Are you already feeling the pinch?
Well, more than seeing the pinch there, Lata, we are participating in it. We already finance resellers on 2 of the 3 popular online marketplaces. We are talking to, again, some of them to offer our easy EMI finance to customers at checkout. And we will see this happening from the early part of the next financial year. And we've also got our own internal initiative of offering online loans. And this spreads to insurance as well. So we think there's clearly a segment of customers that want convenience, that want a better price, and we have our own focus around that as well.
You know, many of these digital companies speak about identifying, the creditworthiness of their borrower through the use of algorithms. Are you all getting into that, analytics and algorithms in a big way, and is that reducing costs?
This is basically what we've been doing on the consumer financing space, Lata. So if you see the fact that we can do 5 million loans a year, making us one of the largest lenders in terms of number of loans in the country, including out of that, more than 60% would be new consumers, is only because of the back-end technology, only because of the fraud algorithms, only because of the credit scorecards that are very easily done in the US but very new over here. So we run a full analytics team internally, including with some external support. And we've been doing this in Bajaj Finance for the last now 4 years. And we've recently started this for our 2 insurance companies also.
Okay, yes, we all do know about that mobile app that you've launched where you approve loans in just 60 seconds. But thanks, Sanjiv, for joining us and talking about the way forward in 2016. That's Bajaj Finance and Bajaj Finserv. Great stocks this year. And as the management's confidence is showing you, there could be great stocks next year as well. But let's